foreclosures in this country are expected to climb to 4.5 million this year from nearly 3 million in 2009, according to Realty Track. Now, today, the Obama administration is out with a new program to help Americans avoid losing their homes. So let's head now to the White House, where Federal Housing Administration Commissioner David Stevens joins us. Thank you so much for joining us this morning, Mr. Stevens. Just yesterday, we heard from the current Fed chair, Ben Bernanke, say that housing is weak. Mortgage market looks a little bit better, but housing is weak. Tell me about the timing of the launch of this program, please.
Well, look, let's try to reflect back on where we were just a couple of years ago when home prices seemed to be in free fall and foreclosures were escalating at such a rapid rate. Clearly, we're by no means anywhere out of the woods yet, but we're in a much more stable environment thanks to really a mosaic of programs that have been implemented by this administration. Today, we announced some enhancements to both the Making Home Affordable program, as well as a new option for FHA, where investors and lenders can write down principal balances for homeowners who are severely underwater in their homes.
But this is another plan, another leg to the stool here, you could say. But the criticism of the previous plans is that participation rates were low. Why didn't those previous plans do the job that your administration intended them to do?
Well, look, I think it's unfair to say the previous plans didn't work or that the numbers are lower. We projected this administration.
You're pleased with the participation rates?
Yeah, absolutely. We had 3 to 4 million homeowners were committed by this administration to be addressed up until 2012. We have over 1 million homeowners in trial modifications today, saving roughly $500 per month per homeowner.
That's the stat I wanted.
More than 3/4 of those are still performing on their mortgages, and these are people who would otherwise be in foreclosure. And our enhancements today will assure that we meet the 3 to 4 million commitment that this administration made by the 2012 timeframe.
Okay, so yeah, the figures that I had heard were something more like 200,000 with the most recent plan, so a little bit different. But tell me about the size of this, because it's what, 14 billion. How does it compare to the other programs?
So the $14 billion is specifically for the FHA Refinance portion of the program. Today we announced enhancements to both the Making Home Affordable program to increase its coverage and to deal with unemployed and negative equity, as well as an FHA Refinance option that uses the existing FHA Refinance program. The $14 billion will be used for writing down second liens, second lien extinguishment, servicer incentives, and help offset risk to the FHA loans that would be originated to homeowners who are in distress and in negative equity.
You know,
in total,
you know the moral hazard argument, and I have to ask you to respond to it, right? Because just yesterday, you know, we heard this conversation happening in the House that this foreclosure prevention program, it's a failed effort, that it's not stopping people from walking away from their homes.
Well, look, again, I think that's an extreme mischaracterization of the effects of the programs that have been implemented. But specifically to the moral hazard piece, I want to just highlight for all of you, all your listeners, that borrowers have to qualify. Their credit will be impaired. Investors will not write down borrowers who are not negative equity. And that's why this program addresses the moral hazard.